Hi, everyone. Welcome back to another one of our Arizona real estate market review videos. If you are here for the long conversation about what just happened in the month of February in the Arizona real estate market, well, you're in the exact right place. If we haven't met before, hi, I'm Katie Evans, aka the Real Estate Boss Mom. I'm also the owner and lead agent of the Living 48 real estate team here at Real Broker, and we are thrilled to have you back to another one of our videos. All right. Let's go ahead. I'm going to share my screen with you, and we're going to start talking about all of the Arizona real estate numbers as they sit in Arizona. Now, remember, we are pulling all of these numbers from both the local MLS, Arizona Regional MLS system, and also from Cromford. Cromford only studies the Arizona real estate market statistics. And so those numbers and what we're going to talk about today is all compiled from that. So let's launch right into our factoids. All right. Just a reminder, supply and inventory, very similar things that we are measuring, only they're measured in two different ways. We want to know how quick is the market moving. One of them is measured in months and one of them is measured in a year. So if we were not to add any more inventory or supply to the market right now, how long would it take for it to sell off? Okay, so those are the numbers that we're looking at. Usually when the market's pretty stable, you'll notice that those numbers are very, very similar. When it starts to get volatile, that's when we're going to start to number or notice huge differences in those two different numbers. So right now, our supply number went from 5.1 months back in January to 4.3 months in February. So you can see a bunch of stuff sold and not as much came back to market. Inventory, we went from 119 days to 123 days on market. That number went up. Our active days on market, that number went down from 98 days on market to 95. And our closed days on market went from 92 to 89. Why is that closed days on market kind of important? Well, if you are priced properly, if your house is one that is going to sell in today's market, as a seller, you're going to want to just kind of know what your days on market is. Again, this is all of everything in our MLS system. So it might be different for your neighborhood. And that's why you're going to need to have a really great agent who's going to deep dive in and see what your market, what your neighborhood, what your city is doing so that they can help best prepare you. Because if we look at Arizona as a whole, you list your house. By the time you get your house listed to the time it goes under contract pending, you're at almost 3 months. And then you're going to have whatever time it takes for you to actually get through that escrow process and get it closed. So in your planning, that's going to be really, really important to know, like, how long are we actually looking at here if we've got to move or we're trying to move when the kids are out of school or those kind of things. So you want to back those numbers out. So it's never too soon to start talking to a real estate agent and seeing how quickly your specific micro market is moving. All right, let's flip over to the other side here and let's look at our active price per square foot. Right now we're sitting at $367 a square foot. That is active, not sold. Okay. That number also went up. Sold price per square foot, we are at $314.92 a square foot. Again, this is very big market, not your specific market. Our average sale price in the state of Arizona is $645,849. That number is still up. And our median sold, while I put this in a green arrow, last month we went down $2,000. And this month we are back up that $2,000. So we are back up to our median sale price of $450,000 here in the state of Arizona. So if you're looking to see what houses cost in the state of Arizona, well, you're looking probably around $450,000 or above for your bread and butter kind of property. All right, let's look at our average sold over the last 12 months. And congratulations, we have hit another all-time record high. And that was $603,849. And our median sold for the last 12 months, again, hanging in solid at that $450,000. We have been there for a long, long time. And what that tells us is our market has stabilized. This is where Arizona wants to live right now. We're right there, 450,000. Now, our appreciation numbers, just take note, neither one of those are negative numbers, but they are, one of them went down, and we're not like wildfire right now. Okay. We're not We're not appreciating a ton, and we're not appreciating a ton very quickly, but we're also not losing money on our houses at the moment. So over the last 12 months, we saw 0.4% appreciation. Okay, that's almost 0.5% of appreciation. And over the last 30 days, we saw 1.1% appreciation. So again, neither one of those are negative numbers. You are not losing your appreciation, but man, are we going slow right now. Yes. Okay, let's stop looking at that for a hard minute. And I'm going to get my Boss Mom glasses out. We're going to have a little conversation about what's going on. Okay, in March. So that's what happened in February. Let's look a little bit forward. Let's talk about March. Whew, all right. In March, we saw up 2% month over month available listings. So in March, we see now even available listings. Now, this is not your bread and butter. This is not single family. This is everything. Okay. So if you want to know single family only, active single family, that number slipped down to 18,248. That is down month over month by 1.5%. Interesting. Last month in February, we saw, because we always see more properties come on the market the first of the year, and we saw several of those actually sell and not enough come in to replace them in February. And so that's why we're starting March off a little bit down as far as single family residents go. There's other stuff out there. Now, the interesting part about this is our builder new builds that are listing them on the MLS. Okay. If they're not listed on the MLS, I can't help you, but that are listing them on the MLS right now, we are holding at about 2,510 spec homes. The ones that should be quick move-ins, or that is about 14% of our market right now. So very, very interesting. Let's see. February followed our seasonality. We put up only about 9,568 new listings. That is down 56, not 56%, but just 56 units year over year. But it logged the second most in a February since 2018. So the argument of there's nothing to buy is gone. Now, I'm not saying there's nothing great to buy, but there is stuff to buy in the state of Arizona. Okay, so just keep that in mind here. Another thing that I think is very interesting, we might have a longer conversation at the end, depending on how long this video gets, is our list prices right now. So a lot of times what we're reporting here includes our luxury market in Arizona, which truly skews the numbers. And not that we are like California or anywhere else like that, but we do have a fairly decent luxury market. When those properties sell, which they are selling right now, our numbers skew up towards those luxury numbers. So just keep that in mind as we're kind of looking at that. That's why I like the median number better than the average number, okay? Because the average number could, if we had one or two luxury properties sell, it totally skews the numbers. So if we're looking at price changes, what I want you to know is their average price changes, and this is within 30 days of going active on market. Our average price adjustment is a $16,000 drop within the first 30 days. The median price drop is $10,000. All right. It's really important that we understand that when we don't price to the market, so if you are that seller that says, let's price it above the market, let's just test the market, let's see what's happening. Well, you are going to end up most likely, if you're overpriced by more than 5%, you are going to be doing a price reduction. And at that point, if you don't do a pretty hefty one, you're going to be chasing the market down. So the best strategy right now is to price correctly out of the gate within the 5% of what the market is actually doing. So listen to your realtor. There's always going to be that realtor that is going to come in and say, oh yeah, we can get you that $50,000 more than what all the other comps are saying, but sure, we can do that for you. Please don't listen to them just because it's what you want to hear. If you really truly want your house sold, listen to the agent that is telling you the truth, even if it's not the truth that you want to hear, okay? The problem with overpricing is we have currently created in the state of Arizona a cancellation and expired, I'm going to call it an epidemic. All right, we are seeing so many canceled and expireds right now. And the reason is because these people are pricing over what it should be priced at. So if we look, let me see if I can find these. Right now, we are seeing a listing success rate, and this number is up, so I'm pleased about that. But the listing success rate right now is only 73%. So a third of our houses, well, just shy of a third of our houses are not actually seeing it through to the finish line, and that is a little bit disappointing. Okay, under contract. We started March with 9,270 properties under contract. That is up 15% month over month and 4% year over year. So we are seeing more houses right now under contract. However, this is the third lowest March since at least 2015. And right now, when we're looking at our seasonality, when we're looking at our trends lines, we are mirroring the previous 3 years. Okay, looks almost exactly the same as far as our seasonality goes. Now, we were just talking about canceled and expireds, and this is a huge part of the Phoenix market right now. In 2025, we saw 35,644 listings out of the market. They either canceled or they expired. And that trend sort of is continuing so far in 2026. With so far, we have got 4,631 properties that have either canceled their listing or expired in the MLS. Some of those will come back to market, maybe with a different agent. Maybe there's a reason for that. But I'm calling it an epidemic because, I'm sorry, 35,644 houses that didn't get sold last year. That is not a great number for us. All right, our closed sales. February actually wrapped up with 5,870 closings. That was a welcome increase of 22% month over month. And it was a large jump from January, February of 2022. So we're really glad about that. It is the most closings for February since 2022. Let's see. Typically, our February closes with more than like 6,500 to 7,500 units. However, this is the fourth year in a row that we did not cross that 6,000 mark. So it's just an interesting thing to note there. All right, our average sale to list price. Again, this is once you finally get to the price where you're getting an offer. So how many adjustments have you had to make before you got to that number? I don't know. But once you get to that number, you're still selling at 97% of the list to sell price. Let's see. Want to see what else we got going on? Oh, in single family residents, there were 1,747 single family residents that came off of the market in February. And of those, 1,036 of them were listed below $580,000 as their sales price. All right. Not a great story for some of us. Again, I'm going to tell you, price it right, have it prepared for market. If you don't, you're going to have a problem. We had a very interesting discussion that I thought might be kind of fun to share with you in this video. And that is, as we're looking at the highs and the lows of the real estate market, when have we hit the peak and when have we hit the bottom? So we're looking at this and we're looking at all the numbers, we're tracking everything, and you never really know that you're in a recovery until you're in it. So this is Katie playing with the crystal ball a little bit. But from what we can see and how it feels out in the marketplace, we seem to be on that very, very, very small upswing from the bottom. All right. So I want to say that we are heading into a recovery right now. There are a few things that make me want to say that. All right. And I'll share them with you. But I'm also going to tell you the few things why I think that this might be slower than everybody wants it to be. So if we look at the number of households that we have here in the United States, we are still grossly under inventoried and underbuilt for the amount of people that we have here in the United States, the family formations, all those people who'd be buying a home typically. And so this demand has been building for years now. And at some point, that demand has to burst something open. Something's got to give, right? So that is one of the reasons that I think I'm feeling fairly optimistic. I don't know where that's coming from, but something's going to have to give in order for that demand to be released. If we are looking at interest rates, you know what? We came under the 6% for just a hot minute, and then everything went crazy in the world again and it popped back up. Now, with uncertainty, maybe the rates will come back down again. Of course, are you going to be mentally and emotionally and financially prepared to make a move during that time? That's up to you. But something's got to give. And the rates are not going to give so much that it's going to change dramatically your monthly payment. So is the job market going to improve? Are we going to see housing prices come down? Well, because we have demand pent up, I don't think that the prices are going to improve that much. I certainly don't think we're going to see a crash. So what's going to give? What's going to give? I would love for you guys to put in the comments below what you think could give in order to make housing affordability a thing, especially here in Arizona. And if you're a seller, are you happy about that? If you're a buyer, are you happy about that? I want you to think about that a little bit and maybe put your thoughts down in the comments below. All right, so that's kind of what we got going on as far as those discussions. I want to close with just this, okay? Let me read this to you. When global uncertainty rises, mortgage rates can move even if our local market hasn't changed. And that's because our mortgage rates follow the bond market. If oil spikes, investors worry about inflation. Bond yields rise and mortgage rates often follow. The key here always in real estate is not to panic. Most of these moves are temporary unless there is a real supply disruption. In Phoenix, we already have high inventory, okay? So buyers have leverage and sellers need to price and position sharply. My job, is to keep you, the client, focused on controllables. Those are going to be things like pricing, concessions, and speed, all right? So let me summarize that for you. And then as we started as a tradition last month, I'm going to tell you a little bit about the rental market. So just to summarize this, you guys, are you going to be prepared to move even in times of uncertainty? Because I think for the next little while, if you're a buyer, this is your moment. This is your moment to take advantage, okay? When people get a little scared, they stop moving. You have this little moment right now where there is just a little bit of concern out in the marketplace, which doesn't mean that you're going to walk in and bid $100,000 lower on somebody's house and get them to say yes. But what it does mean is for the first time in a really, really long time, you've got some negotiation power. In fact, you have that much more negotiating power than the seller has. Okay, so the seller has hopefully already priced appropriately for the market. They've prepared their house for the market, which neither one of those things have they had to do for years. For years, they could just put whatever they wanted to out on the market and it would sell and it would go under contract for more than what they were asking. For a while, we're talking about our list price as a starting point, not as a we're going to start and go up from there, not as okay, well, we're hoping for this, but we're willing to negotiate down, okay? So nowadays, yeah, that price is still a starting point, but we're prepping our sellers to negotiate. Now that we may keep that price, but what we're going to do is we're going to be negotiating in seller concessions. We're going to be negotiating repairs. We're going to be negotiating seller concessions to put towards buying down your rate. There's so many things that you as the buyer have in this very moment that you may not have in the next moment. That's my loving real estate boss mom thought for you, is this is a moment in the real estate market, especially here in Arizona, where you have an opportunity to negotiate like you have not had in years. And I would love for you, if the time is right for you, to take advantage of that. Okay, let's switch gears for a hot second. Let's go over to the rental market, because I know that I do have a few investors out there that find this interesting, or those of you who would like to be investors in the future. I'd love to chat with you as well. All right, the overall rule of thumb here, again, is kind of the same as the resale, but it's different because it's rentals. Right now, the rental market it's softer than it's been in a little while. So my investors, you're not getting to demand the prices that you wanted, and you're looking at a few months probably to fill your vacancies when you lose your current tenants. So what I want you to think about is What is the cost of just keeping that tenant? Is it worth doing what you can to make them happy? If you have to get a new tenant, then you need to have your house price ready. The house has to be ready. Okay. So you have to have it painted. You have to have it, it has to be ready. Do the things to make it ready. You have to price it right. If you are pricing it even $100, $500 more than the market is actually going to support right now, you're going to have longer days to fulfill that vacancy, and you will have lost more money just trying to get that extra few dollars than if you would have gone to the right price and gotten that vacancy filled quicker. So have it ready, price it right, and by darn it, your marketing matters. The photos matter, everything matters. So make sure that you are working with a good property management company to get that property on there. I personally not do property management, but I have a fantastic partner that does, that I feel more than comfortable referring you to. Now, the big thing I want you to know right now is if you are looking at a luxury rental, friends, you need to be talking to a professional. That is a big deal right now. Our active rentals, the median price per square foot is about $1.47, and the average is $1.56. Our closed rentals, the median price per square foot, $1.30, and the average is $1.36. Active listings are currently priced notably higher per square foot than what is actually closing. Those people are losing money in the form of their extended vacancies. So that gap often shows up as longer marketing times and eventual price reductions. So make sure that you have got it ready for market, priced right, and you've got somebody doing great marketing for you. Okay, as always, you guys, we are here to be a resource for you with all of your real estate related questions. We sell in the state of Arizona. However, we have got connections, friends all over the world, as a matter of fact. So if you have questions about real estate, please don't hesitate reaching out to me and I will get you in touch with the right person. Thanks so much for watching, and we'll catch you next month on our monthly market review.